Let's welcome in our morning guest now. Siddharth Sadani is with us. SP Prasad will just join us, and Ruchit Jain is also now joining us. Ruchit, let's start with you. What are your top picks?
Hi, good morning, Pankaj. Pankaj, overall, we feel that the markets would continue this positive momentum which has been seen since last few months. So we have both the buy calls. First is a buy call in HUL, Hindustan Unilever. During last week, we saw the stock giving a breakout from its long-term resistance, which was there since last 2 years. So I think this stock would now see a trended up move in near term. At current levels, traders should look to go along with stop loss below 945. We're expecting level around 1045, which is 161.8% retracement of the previous corrective move. Second pick is a one from mid-cap space, which is Titagarh Wagons. Of late, this stock has started forming higher top, higher bottom formation on the daily charts. The volumes in the recent up move has started increasing compared to what they have been during the corrective moves. So I think Titagarh Wagons would be one of the outperformers within the mid-cap space. Traders, short-term traders with 2 to 3 weeks of time horizon can look to buy this stock with stop loss below 120 for target around 147.
Right. Siddharth, what will be your calls?
Well, the first idea would be Deepak Nitrite. I would say with a target of 179. It is into a niche chemical play. The quarterly results were not that exciting. Q4 numbers on the back of their Hyderabad and Roha plant getting shut, but subsequently now it is getting started. Apart from that, they have a greenfield expansion in Dahej for acetone and phenol. I think this chemical is 90% imported in India, so the company is again initiating it in manufacturing in India. That is something a first move advantage for the company, and this is a high value product. So margins also would be quite good. So overall perspective, Deepak Nitrite with the 18 times FY18 earnings, we like the company with a target of 179. The other company from the cement pack, I would say mid-cap cement pack, is Dalmia Bharat with a target of 3005. Again, a company has clocked 17% volume growth in the current quarter. Apart from that, 90% earning growth was seen on a YOY basis. That was something excited the market. Apart from that, we expect some of the cost-saving measures increase their EBITDA per ton. And we expect 1365 EBITDA per ton for FY19. Apart from that, deleveraging benefits, no more further capex, and good cash flows for the company. I think Dalmia Bharat expects 7 to 8% or probably 8% growth in east and southern part of the country, and 7 to 8% in the western part of the country in terms of dispatches are concerned. Dalmia Bharat in the mid-cap cement pack looks very interesting with a target of 3005.
All right, so Dalmia Bharat is a pick there. We also have Mr. S.V. Prasad with us. Good morning, Mr. Prasad. What are your top picks for the day?
Good morning. I continue to like State Bank of India. I continue to like HPCL, Sun Pharma, Reddy's, and Reliance. And the one new name which I would like to put in is ACC, because the merger that's being talked about, ACC and Ambuja, ACC is already a subsidiary of Ambuja. Once the merger goes through, I think it will be beneficial for the ACC shareholders. Forget the immediate impact of what the ratio is and what is the arbitrage opportunity. But on a long-term basis, there are going to be cost savings. So there's obviously the economics make sense, because I'm sure there's quite a lot of duplication of costs. And secondly, Ambuja is definitely a much stronger, financially much stronger company. So all in all, it should be a win-win for ACC.
All right, before we go ahead, quick check of how the currency is doing. Today it's gained a third of 1%. The move seems quite significant because now the rupee is nearly at 64 to a dollar. So a good move being seen in the currency, and this perhaps goes to show the kind of optimism we're having on the inflation picture. Now, for the month of April, we got the consumer inflation data, and in April, the consumer inflation has come in at 3%. This is much better than what the RBI had thought. In fact, the RBI's medium-term inflation target is 4%. So we've seen inflation ease quite significantly. And what is even more heartening is that the core inflation data has eased. In April, core inflation has come in at 4.4% versus 5% that we saw in March. We also got industrial production data for the month of March coming in. This is the revised series now. New series has come in for IIP. For March, we saw an expansion of 2.7%. In February, the same series, the expansion was about 1.9%. In January, the expansion was 3.8%. Amongst the sectors that grew well in the month of March, we saw mining up about 10%, electricity up 6.2%.
Right. On the basis of CPI and what's happened, the big change will of course be, what happens to the RBI rates and what's the stance of RBI. So what a lot of economists are saying, let's start with Motilal. This is after the CPI and the IIP data, that RBI will find it difficult to resist to cut rates now. They won't be surprised if a rate cuts happen in June 2017. 7 June, of course, is the meeting of RBI. So that's what they are referring to when they say June 2017. IDFC says don't expect any changes in the RBI monetary policy stance. Pranjul Bhandari at HSBC says that they would expect RBI to take a note of this inflation, but at the same time, they expect them to hold on to rates. They would be positively surprised, but they don't expect any rate cut. Similar is the view from Nomura as well, that considering the growth, considering the sort of liquidity in the system, they would not expect any major rate cut to happen in 2017, even though the inflation data is pointing out towards a lower start. Just a quick program reminder as well. 10:30 a.m. today, you can catch an exclusive interaction with Arvind Subramaniam. We'll play out this entire interaction at 10:30 a.m. So that's a conversation that, of course, you would not want to miss. In terms of some of the stocks that will be in focus, so we spoke about the macro data, what the call on India is from Morgan Stanley. Some individual stocks that will be in focus. Let's start with Idea Cellular. So they reported a loss of around 327 crores. Of course, for a company like Idea, you compare it on a QOQ basis, and the estimates were close to 550 crores. But I think that there was a strong cost control that the company has shown in this quarter. It was also shown by Bharti Airtel Limited, and similar is the case with Idea. If you look at the EBITDA, 2,196 crores, that's about 27% in terms of margin. So that's a decently strong margin. But again, it's pointing out towards pressure, not the margin, the sales front, and that itself is taking the numbers lower. These are some important metrics for Idea. So subscription, or the total subscription, is now at 190 million, which is 2.3% higher QOQ. Revenue per minute is about 34.5 paisa. That's about a 15% decline. Average revenue per user is down by about 9%. It was expected with the sort of freebies that Jio was giving. And the overall traffic was up 10%. The volumes basically tend to go up because Idea didn't match what Jio did. Even Bharti did what Jio did. And that's why the volumes went up quite significantly. And significantly for the data volumes. You can see the data volumes, which is the last column. It went up 16%. But at the same time, you have the data average revenue, which went down 27%. So overall, there was a decline. Even though there was a volume set off, it did not make up particularly for the loss in realizations that you have seen. Idea, this is pre-open price, indicating a 35 paisa lower start, but numbers were decent and a strong cost control, Anisha, is what the management did show.
Yes, that's heartening for a telecom company that is beset with competitive pressures. Let's pull up Titan for you. Now, Titan came out with its earnings, and we saw a good 43% jump coming in the top line. The sales were slightly, they missed estimates. They were only up 8% or so at 1 crore rupees. Now, the biggest plus point for Titan is that the jewelry business has seen a strong revival. It's seen strong growth. The EBITDA was higher at 272 crore rupees, but the EBITDA margins contracted about 90 basis points, coming in at 7.9% due to higher raw material cost. But when it comes to the jewelry business, which is 3/4 of their business actually, their sales were higher 55%, EBIT was up 36%. So for those who track this jewelry company, they would feel that the business looks to be back on track for a reasonable amount of growth coming in FY18. There were a lot of worries about the impact of demonetization. That seems to be wearing off. Revenue growth, the management says they see revenue growth in FY18 in the high teens. Not only, and they expect to maintain their current margins, not just the jewelry business, even the eye care business did well in the fourth quarter. They feel that the GST will accelerate market share gains, and there is a belief that once there is a shift from the unorganized to the organized sector, jewelry companies with a good brand recall like Titan will benefit.
Right, Anisha, Nestle, of course, from the FMCG pack will also be in focus. They declared their Q1 numbers. Remember, it's an international company. They follow the calendar year 17, and Q1 is what they have declared. 2,475 crores in sales versus 2,277 crores. You had the PAT number closer to 306 crores. Now, unlike some of the other companies, they don't give out volume data. They don't give out category-wise volume data on a quarterly basis. In the annual report, of course, they say what Maggi is doing, what some of their other key brands are doing, but on a reported basis and a quarterly basis, they don't give out that number. Domestic sales are up 9.4%. I've excluded the excise duty in this, so probably this gives you a trend that at least there is a 9% growth, realizations plus volumes. Sales, what the management says, was across categories. So it was a volume-led growth led by across categories. There were a couple of key raw material prices that went up that took the margin slightly lower, so about 20.2%. But again, there was nothing to cheer about. At the same time, there was nothing to worry about. So not much that one can read into the Nestle numbers at this point of time. Let's go back to our guest, SV. Let's start with you. What do you make of Idea and Bharti's numbers now? Considering that it was the worst, in terms of the best ever cost control that they have shown. If the cost control is maintained, you think Street would be surprised positively?
No, not really, Pankaj, because see, one major change that's happening, and it's following international trend, is that, see, these businesses are getting more and more commoditized. Let's face it, so long as your data speed is fine, your call drops are not happening, and the government is definitely shown the stick to these companies. Whether you use company A or company B, it really doesn't make a difference. So the danger for these guys in the medium term, if not in the long term, is the commoditization of these businesses, and this follows a global pattern. So when you have a price warrior like Jio, who doesn't seem to be really letting up, okay, he may not be giving away freebies as much as he was doing earlier, but the fact of the matter is he's still a price warrior. So as long as that is happening, as an investor, I would tend to keep my distance. As I've mentioned, there are enough and more opportunities available in other sectors. I would much rather focus on them rather than trying to fish in the telecom waters.
Right. What will be your call on the FMCG pack? So, even you had Titan. Anisha just took us through the numbers. Sales are pretty good. Margins are lower. You think that's a trend across sector now?
Yeah, certainly. I think there's no question about it. See, Titan has one advantage is that it's got the brand. No question about it. But again, I have a slightly different view. I think the focus should have been more on things like watches. Jewelry is something, again, lots of regional brands and stuff like that. You have Kalyan Jewelers and others who have also grown in a very aggressive and massive way. So I'm not so sure. I mean, this is my personal view. If one has to look at FMCG, frankly, I would stick to the tried and tested. I would look at some of the MNC majors, who are force of habit. Whether you talk a Colgate or a Unilever or Nestle, which you just mentioned, one would much rather look at these counters whenever there are dips. And frankly, these are all defensive stocks. I think that's one thing we must realize. These are not the kind of huge multi-baggers that we have seen in the past.
Right, just about 34 seconds remaining. Siddharth, quickly, if you could just tell us Vedanta results today. It will be important because the stock has rallied.
Of course, it would be very important, and I think result can beat the estimates also. It's just because of entire metal pack is doing good, and we expect metal sector to do good, especially non-ferrous space.
Right. Siddharth, I'll just come back to you. Markets are about to open. That's a quick program reminder at 10:30 a.m. an exclusive interaction with Arvind Subramaniam. These are the first ticks for you. Hindalco 191, really no movement. ONGC, there is an upgrade which has come in from Credit Suisse. That's why it's up 2%. Tata Power 25 paisa higher, 82.83. Aurobindo Pharma 1 rupee here and there. Ambuja Cement absolutely flat. You have HDFC Bank flat with a negative bias, and Asian Paints is on the positive side. Idea Cellular from the first tick is down 60 paisa. So it's not much in terms of movement. So not much in terms of any major reaction that one can say about Idea Cellular. 3.5 lakh shares traded. Titan is down 6 rupees from the word go. So it's reacting to numbers, and margins were a miss, and that led to volumes being very, very high. Nestle, but just 499 shares in terms of trading, so it's not much that again it's reacting to. So Nestle is slightly on the negative side. That's PNB Housing for you, 1.5% higher, 1,354. Provisioning was slightly higher, but apart from that, the numbers were in line. Central Bank of India down 6%. There was a loss. Gross NPA increased, and now the stock is down about 6.5%, looking in extremely weak right now. Karnataka Bank is also reacting to numbers. It's about 3 to 4 rupees higher, 168, 169, 2% higher for Karnataka Bank. Inox Wind is down 15%. Numbers were clearly very, very weak, and that's down 15% right now. 4.5 lakh shares traded. That's a quick heel for you, 1%. Let's look at Inox Wind once again. It's now down 18%. So 16.5 to about 20 odd levels. It's down about 18 odd %, and it's looking in very weak. Numbers were weak. Guidance was not quite meaningful, and that's taken the stock down. Look at the volumes initially. That's about 5.5 lakh shares traded, and it's down about 17 odd %. So it's almost close to a lower circuit. TVS Electronics up 6%. Numbers were looking fabulous. Remember, it's a company which benefits from the digitization theme, and that was probably seen this time. 6.5% higher. Vinity Organics, not much to read in. 201 shares traded, but it's on the positive side, about 15 to 20 rupees. So that's probably only the one key takeaway from these numbers. Anisha, any other names with volumes?
Yes, there are stocks that are buzzing on high volumes, but names that we don't know of too much. Indo Solar is up 5.5%. The entire solar space has started to buzz on Friday. Welspun Corporation is up 5%. Kesoram Industries up 5%. The chemicals pack again buzzing. Rashtra Chemicals and Fertilizers up 5%. Chambal Fertilizers up 4%. So these are some of the stocks to watch. There is a stock, Bhansali Engineering Polymer. Now, this stock is up 15% for the last 1 week. It's a small cap, we don't know much about, but it moves on high volumes, and today it's up. Some of the real estate companies have done well today in opening trade and on high volumes. HTIL, Anantraj and India Pools Real Estate have moved up well with gains of 1.5%. We have PNB Gills down 8%. UCO Bank is down 7%. Tata Tele down 5%. Oriental Bank of Commerce down 2%. So some of the PSU bank names are coming under pressure today. UCO Bank is now down about 6% or so. Ruchit, this week we'll get earnings from PNB and SBI. What's your call on these two counters on the charts? What levels are you watching out for?
Correction on the daily charts, it had formed a bearish engulfing pattern, which is indicating that the stock might show a corrective move. A crucial support from trading perspective for this stock would be 163, which was the previous resistance breakout and which could now act as a support. But I think comparatively SBI definitely looks much stronger. Recently the stock has given a breakout from a consolidation phase of about 2.5 months of consolidation, and on the higher side it seems that the stock is now likely to head higher towards 314, 315 kind of levels. So within the PSU space, one stock that could outperform the rest of the other would be SBI. So I think if anyone wants to pick up any stock from trading perspective, then definitely it would be State Bank of India.
All right. Ruchit is positive on Yes Bank. Siddharth, what do you do? Sorry, Ruchit is positive in SBI, but my question is on Yes Bank. Siddharth, what would you do with Yes Bank? On Friday, we saw a big fall coming in. At this point in time, remains stable. There are some worries about its NPAs declared and the kind of variance it is with what the RBI thinks should have been the right provisioning. Do you think some of these concerns are overblown because the management says that they've provided for this and there is no carryover in the current year?
Right, we'll wait for the clarity further emerges from the management as well as RBI. But overall perspective, we believe that it's a great company to be in. If we talk about the asset quality also, it is stable. Growth is also coming up. If we talk about loan book, growth is around 38-39%, which is again very good. NIMs are strong. So overall perspective, the performance of the company has been good. QIP is going on. So overall perspective, we believe that we have a buy rating on the company with a target of 1700. And we are positive on the company, and the strategy for Yes Bank should be at the current time is buy on dips. because the performance can be good going forward, and of course the news which is there. I think that can be a history if some clarity emerges out of this.
Right. SV, what will be your view on these private banks? Yes Bank says that they're taking the entire impact, but there is a big divergence. How do you think investors would react to that?
There would definitely be people who, Pankaj, look at it, with a lot of caution, because, and mind you, these are March 16 numbers. So the first concern will be how the March 17 numbers will look like. Frankly, I've always maintained that in the banking space, be it PSU or private bank, it's better to stick to the leaders who have shown tremendous governance, tremendous growth. So if you talk of the private sector, I would still continue to focus on HDFC Bank, Kotak and IndusInd. These are the three names I really like, because in terms of governance, quality of assets, kind of growth they have shown, diversified business book, I think these three are excellent names. I don't want to unnecessarily diversify my banking book, and PSU, SBI has always been my favorite. I've been mentioning this on your channel, and I'm glad to say that our technical analyst has also said, the expert has also said that it's at a breakout. So I think all for the good for SBI.
Right, but can you just tell us that SP, it was not about the number of NPAs or the amount of gross NPAs. It was about the divergence that was being reported versus what RBI was saying. That is the concern, because we've seen it for ICICI as well, we've seen it for Axis as well, but the percentage divergence is very low.
Yeah, but see here, the first concern is which anybody will have, and I don't want to press a panic button, is it just the tip of the iceberg? I think that's the first concern you have. Now, I have a slightly different take. When banks show the kind of growth that, one of the fellow panelists was mentioning, I always am a little concerned, because when you talk of growth, two things happen. Does the management have the bandwidth to manage the growth? Number one. Number two are the quality of assets suffering? Because there are tremendous growth opportunities in the lending space in India. Then if you grow beyond whatever, chances are your credit quality may take a hit. So I would tend to be cautious and focus on some of the names that I mentioned earlier, rather than trying to unnecessarily diversify. And frankly, a lot of these private sector names, Pankaj, is run up a lot. And then you look at some of the smaller banks, run up that much more, not much volume. So, these are the concerns that I have.
Right, and that would keep, the valuations that is there, that would keep, the upside limited from here on.
Absolutely. So then you do the risk-reward ratio, and then you need to ask yourself the question that, where do I place my bets?
Right. Ruchit, what will be your call on Titan Limited? On a technical basis, it's opened down 2.5%, 3%. I think it's factored in the results. What would be your call from here on? It's had a phenomenal run this year so far.
Yes, Pankaj, already we have seen a good run up in the last few months, and if you observe specifically the RSI indicator on the daily as well as weekly charts, these are now indicating a more of overbought scenario. It's not necessary that the prices would correct from here, but I think now for next few weeks we may see some sort of consolidation coming in the stock. Even last week we had a long candle on the weekly charts whose range was 460 to 505. So I believe that rather than moving higher now, this stock would consolidate for some time in the range of 465 to 505.
Right. Any view on J&K Bank? It opened about 87, 88 rupees on basis of results, and now it's down about 1.5%. Any view on that name?
Pankaj, generally we don't see that kind of volumes coming in this stock. Even if we observe the longer term charts, then during October 2016 the stock had faced a huge resistance around the levels of 90, from where the stock corrected right way up to 55. So I think now after this recent up move, the stock has now again approaching the near to the level resistance of 90. So I think rather than waiting for this stock to show any kind of movement, it's better to get out of this stock and rather invest in some other PSU space which could show some positive momentum.
Right. JK Cement, let's just pull up that name. It's up around 10% right now. Again, it's a results impact that we are talking about. It's up 10% right now. It's at the day's highest point. JK Cement about 10% higher, 11% higher now, 1189. Siddharth, any view on JK Cement or the cement sector?
Well, JK Cement is concerned, I think EBITDA per ton also may rise in next 2 years is concerned. It's a good managed well company. I think volumes are also coming up for the company. Apart from that, the entire cement pack, we are quite constructive on the mid-cap cement pack rather than being into the large-cap space. One of the company which I have already recommended earlier is Dalmia Bharat. We believe that, of course, with the kind of numbers it has posted and the deleveraging play which company is going to get going forward, I think that will increase and expand the EBITDA per ton for the company. It's a well-managed company. 8% odd demand growth is expected from eastern and southern part of the country. So Dalmia Bharat in the mid-cap cement pack, Ramco Cements, Birla Corp, all these companies look quite attractive for the cement pack because of the reasons. Of course, it's reasons like affordable homes, infrastructure, housing for all. I think this will drive the demand for cement companies going forward.
All right, so that's the view coming in from Siddharth. Ruchit, you've been positive on Tata Steel. Today it's amongst the top 3 gainers on the Nifty. It's above, I think, 440 rupees now, 445, 2% higher. Do you think it's headed to 460, 475, or is there scope for some correction now?
Yes, Alisha, I think the metal space have already shown a good corrective move in last 1 month. And if you observe the broader trend for the metal space, then most of the stocks, Hindalco, Tata Steel, Vedanta, have been forming a high top, high bottom structure on the weekly and the monthly chart. In fact, this entire bull market, this was led by the metal space earlier. So I think whenever you see such stocks correcting in the bull markets, it's just a buying opportunity whenever they come to the support. Now Tata Steel is now trading around its 200-day simple moving average support after the recent corrective move. So the risk reward ratio is very much favorable over here. We can conclude that the downside seems to be very limited in this stock now. So definitely, if anyone wants to look this stock from positional perspective, it's a good opportunity to go long. On the lower side, the 200 SMA, which is placed around 400 and 426, 427, could be kept as a stop loss. And on the higher side, I think pullback move should come up to 474 in very short term.
All right, so that's if you coming in on Tata Steel. Thank you, gentlemen, for joining us on NDTV Profit. As you go, please leave us with the disclosures. Your disclosures, Mr. Prasad.
Yeah, my disclosures continue to remain the same. State Bank, I have a small holding in State Bank of India, Hindustan Petroleum, Sun Pharma, and Ambuja Cements.
Ruchit, your disclosures?
I don't personally hold any of the stocks that you've discussed, but similar recommendations that we have given have been given to our clients also.
Siddharth, your disclosures?
Personally, don't hold any of the stock discussed, but clients and organization must be holding. Thank you.
All right, gentlemen, thank you so much for joining us on NDTV Profit.